following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests, and
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great month, folks. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We have the Dow Industrials up 150, NASDAQ up 69, S&P's up 22, gold contract down $6.90, trading at $1,134 an ounce. Silver down 15 cents at $15.41 an ounce. Platinum down $7.50, $9.78 an ounce. Copper down 55 cents, down a half a penny at $2.31 a pound. Light sweet crude down 52 cents, $46.07 a barrel. Bonds 10-year down 11 ticks, 127.11. 30-year off 23 ticks, 155.23. King dollar down 29 ticks, 96.99. The euro is up 7 at $1.10, and the yen is trading up 14 at 120.76. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So last week, folks, what you had in the SPY came into ICE, failed on the daily, on the weekly. Bottom line, today, takes it over, gets up over the whole ball of wax. Right now, we've done 58 million shares. You're at 210.31, and 210.68 is the high that was generated out there on the 18th. You can go back to the actual high. It's 213.75. The volume out here is about as light as you get almost for the whole year. This is going to get wild watching this thing shake out, and this is why. Thus far, we've done 532 million on the NYSE. That, folks, is anemic. That is saying we'll probably come in around 700, 725. And if that's what we do, that's going to be one of the lightest days of the year. NDX 100. Let's go into the 3Qs and take a look at the 3Qs. 3Qs thus far, hanging at the highs. Last week, the 3Qs failed on price and volume as they got into the high, the 114.39. Right now, you're over that high. We do have lighter volume. Bottom line, you're over the high. We'll see how this shakes out coming into the close today. Inside the NDX 100, what's putting the strength inside the NDX 100 versus the weakness is here you go. Mylan Pharmaceutical is up 183. JD.com is up 113. Biogen is up 1170, and you get Tesla up $8. Taken away from it on the way down, NXPI is down 217. Verstech is down 132, and you get Biomedical down 191. Inside the Dow Industrials, what do you have? Bottom line inside the Dow, oil is running the Dow right now. Chevron's up 411, and if you want to see these Chevron and Oxy, folks, Chevron and ExxonMobil, their ABC structures on the way up. They're beauties too, by the way. Pretty intense. Okay, so Chevron came off the bottom. Chevron bottomed out on the 24th, $69. You're at 95 right now, but guess what? It's an ABC up. It's a confirmed ABC up. That's what it looks like. Your A point on Chevron, 75.25. Your B's 91. It's a monster, man. That's $15. Your C is 86. That's $100. 80, yeah, It's going for $100. ExxonMobil, XOM, same setup on ExxonMobil. And this is, so ExxonMobil, what you have is this. She's up 275, 13 million shares. Your A point, this is a 10-point ABC. Your A point is 71. Your B is 80. Yeah, 82. 79, 89. You're talking $90. And right now we're at 85.47. Inside the Dow, what you have as to strength versus the weakness, your strength is Chevron number 1, up 415. Pfizer's up 129. ExxonMobil's up 274. And JP Morgan Chase is up 130. Inside the gold market, now this is pretty wild what's happening. So gold, folks, since the Fed last Wednesday came out and said, listen, we think that we're going to be going up in December. The gold contract at that particular point, prior to 2 o'clock in the afternoon, was trading at 1183. Gold went from 1183 down to 1176. Actually went to 1152 and then closed out at 1176. When you say it closed out, what happens on your quotes, folks, the closeout price is going to be 1:30 in the afternoon. It kept trading. It actually, by 4 o'clock in the afternoon, it was down at 1152. Okay, so what do we do there? You had volume, you had juice, you had all of the above. We continue lower Thursday. You get down to 1144. Friday, we get down to 1138. Today, we get to 1132. Contraction of volume today and Friday has been dramatic. It's really sweet, too. We've done 95,000 contracts. You're going into 190,000. Now, that being said, guess what? The equities will not back off. And in fact, the equities right now, if we go over and we take a look at the XAU and the HUI, it looks to me like the equities are actually going to do an ABC structure on the way up. It's going to be really great watching how this whole thing shakes out. What has happened thus far, if we look at the XAU out here today has rejected the 51.45 level. Now, the area that we're rejecting is where the strength came from October 6th, October 7th, October 5th. Bottom line, you're into that area. It's rejected lower price, and we'll see how this shakes out. That's saying it's going to go for the highs once again. It's going to be wild watching that shake out. Why? Because of the divergence between how the metal has reacted versus the equities. Now let's go over to the dollar. We take a look at the dollar, and what we have with the dollar is this. The dollar went topside, had the price spread, had the volume, took out a B point, did all of the above. So the dollar wants to trade to 1. We're at 96. And it's like, okay, so if the dollar's trading to 1 and gold doesn't want to get down anymore and the equities want to go up, what the heck's going on? Well, we're going to find out quick enough. I suspect we're going to find out this week. Okay, bonds. Let's go over to the bond market. When we take a look at the bond market, what we're setting up is this. What bonds have done out here today, dramatically lighter volume. Thus far, they haven't rejected lower price. We're at 127.13. Yeah, you stay right there, folks. We'll be coming right back. We'll bisect and dissect that bond market. Dow Industrials up 147, NASDAQ up 68, S&P's up 22. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow up 151, Nasdaq up 67, S&Ps are up 22. And if we go over to that bond market, we take a look at bonds. This is where you stand with the 10-year. So the 10-year right now is at 127.12. The low of today is 127.11. You've done, now the contraction is pretty dramatic in the bond market. We've done 892,000 contracts. That's when it's been banging out 1.4, 1.5 million contracts. What you haven't got yet is the rejection of lower price. Now, you haven't made it to the lowest swing point either, which is 126.16. That's your 10. Your 30-year, we take a look at the 30, and the 30-year is right at the lows with what 155.26. Also contraction of volume. We've done 192,000 contracts versus 354. But simultaneously, what you have to also get is a rejection of price. Now, I suspect we're going to get a rejection of price tomorrow, the next day, pretty soon. Why? Because when you start looking at where the bond market is, where the dollar, where the gold market wants to go, and us being at highs with dramatically lighter volume, it's like this thing is setting up. Now, let's go over to the IBB. So the IBB, folks, is trading right now. This is the NASDAQ Biotech Index. This is trading at 337.64. The high of last Thursday was 336. I suspect this thing is going to try to get into somewhere around even 359. That's where this thing died in the vine. Let it get there. Because if, in fact, it gets there, that's going to be a gift from the trading gods to sell the heck out of that thing. Because inside the IBB, what you have the high volume spike low on the 24th of August. Then you came down and tested that high volume spike low. So the high volume spike low is 4.8 million shares at 284. You bounced up to 366. You come back down to 285, but you came down to 285 with 11.8 million shares. And you're going up with 1.3, 1.2, 1.5 million shares. That is a beautiful counter trend bounce. Volume is dying on the vine. It sets up at least a consolidation. Some of the higher volume stocks in this low volume market today, this is what you have. Bank of America is up 30 cents. You get Hewitt Packard up $1.55. Visa's down $2.50. Visa's buying These are Europe, which they spun off right before they went public 7 years ago. They're just getting back together again. You have Pfizer up $1.30. Pfizer's merging with someone okay, PFE. Let me get this. They're merging with another. They're going to go Allergen. Yeah. So that's going to be an Irish company now. You have Ford Motor Company is down 6 cents. You got Kinder Morgan down 65. Facebook is up $1.39. Let's go look at Facebook, because Facebook has the potential to really bring the NASDAQ dramatically higher or lower pretty quickly. Facebook is coming out with their numbers Wednesday after the close. This is what you have. Right now we're trading at 103.36. What it's done out here thus far today, it's rejected lower price, has lighter volume, so that's a clean rejection. And what it has also done is that where it went topside on the 23rd, you know, it came into that bar today, 20 million versus 42 million. We pull this back on a weekly. So on a weekly, it's going to need a lot more volume. See, it had volume up to $97.28. So on a weekly, it wasn't bad at that particular point. Whether you're long or short, folks, Facebook is something you have to really keep your eye on. And the reason being is that when you take a look at what Amazon did and what Google did, when they come in with their numbers, that could be one monster trade. Large, you know, if it takes off like that, there's no two ways about it. 877-927-6648. Let's go take a look at Apple. So Apple continues to struggle. 26 million shares, and that's going into 69 million. You know, it's going to be intriguing here watching this whole Apple thing shake out, because when you do pull this back, you know, it's basically it's staying at highs. I mean, the high in Apple is only 134 or 121. You know, so you can make the case that, hey, that's at highs, but you can also make the separate case that you're just coming into ice. Ice on Apple, where it broke down, is 123.91 to 122. That's where this baby broke down from. It broke down at monster volume. It's been coming back up with lighter volume, and you know, we'll see if in fact that thing just blows apart once again. CMG. Now this is a problem child in a big way. CMG, they had a Seattle. It's Seattle. It's two cities. They had Seattle and Portland. They closed 43 restaurants. E. coli. It wasn't necessarily in all their stores, but the bottom line is that as a precaution, they closed them. This had already come off its highs with monster volume. When this came out with numbers, it was traded at $720 10 trading days ago. It's down $100 in 10 days. If it gaps lower, monster volume, goes sideways for 4 days, you're going to have monster volume again. And we put this back on a weekly basis, and what you're going to see is that 582. So on a, has it hit 582 yet? No. Okay, it's at 608. 608 was the low of today. This looks like it's going to back into 582. 582, folks, is where in July of 2014 that went topside. That's on the weekly. Now, if we put this on a monthly, so we came down with 14 million shares, yet you're going into 16 million. So that's not bad. This is going to be, okay, so Chipotle, I wouldn't be buying it here, but it looks like this thing gets down to 597. You want to see, does it reject that lower price at 597? And what you'd like to see, if you are going to buy it, is that it waits until the end of the month so you can get an idea of what the volume is going to be in November. That's how this thing shakes out. There continues to be a lot more destruction inside the marketplace, even with all these indices at highs. So if we took a look, let me pull this down a little. You can see this, how this is shaking up. So today what you have, Lending Tree is down 5%. Ellie Mac is down 8%. Treehouse Foods, that's going to be, they're buying someone else, so that's down 5%. Charter Communications is off 2%. So it's not that bad out here today compared to, so these are the ones that are up. You have Valiant Pharmaceutical up 8%. That's up $10. Let's go over to Valiant because it's a riot watching, you know, Wall Street and the the broker-dealer community come out saying bye, bye, bye Chipotle this morning, which is just really wild. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 178. Nasdaq's up 61. S&Ps are up 25. And, you know, when you talk the banking structure, folks, it just never stops. That on a continual basis, what banks absolutely have done is that grab all the money they can, whether it's legal or illegal, then pay the fines. This one here, so JP Morgan Chase today agreed to pay California $50 million to resolve claims that the bank cheated tens of thousands of credit card customers while collecting debts from them. The Accord announced a few hours ago with the Consumer Financial Protection Bureau in 47 states JP Morgan, what they're going to do is this. They're pledging $166 million, first off. They're going to change their practices that the regulators found were abusive. And the bottom line, man, this is just amazing. So this was the allegation. From 2009 to 2013, Chase filed 125,000 credit card collection lawsuits against consumers relying on illegal robo-signing. If you remember the robo-signing deal, folks, this is where the Bank of America had a big deal with the robo-signing in the aspect of the mortgages. And what robo-signing specifically is this. Is that, let's picture that you're going to bring someone to court. Well, what ends up happening is that you are signing an affidavit saying that they either owe you, let's say we're talking about a debt situation, that they owe you something, that you are the owner of that mortgage. So first I'll start with the mortgage. The way that Bank of America got grabbed was this, is that they were claiming that they were owed a amount of money, that they were the owner of the mortgage. Well, what they found out, number one, that they weren't the owner of the mortgage because they already sold the mortgage to Mears. That wasn't the big part of it, though. The big part of it was that the person that was the robo-signing of it was not the person. It was just clerk signing away, okay? Illegal, flat out, okay? Now, this one here, so picture, Bank of America got caught, right? They ended up paying something, get rid of that. This one here, same deal, from 2009 to 2015, JP Morgan does the exact same thing. And then here's JP Morgan's statement. JP Morgan's statement is that, oh yeah, well, Chase has taken extensive steps over the past 4 years and is pleased to resolve these legacy issues. Like a legacy issue, folks, means that this is something before the time. It's not before the time, okay? The bottom line is it's part of how banks do business now. And I don't think it's going to change either. You know, why? Because no one basically goes to jail. That's the bottom line. You know, this is part of the overhead inside the structure right now. That's how this thing is shaken out. And if this was the thing that's amazing, just watching that one for even 50 million. 15 years ago, that would have been a lot of money. Now that's nothing to them. Absolutely nothing. And if you are in the market for a Porsche, folks, you might just wait a month or so, because what did happen this afternoon is that the Environmental Protection Agency, bottom line, expanded their investigation into Volkswagen, and there is a slew of vehicles, man. I mean, it just doesn't stop. You get those Audi A8s, which are just gorgeous vehicles, the Porsche Cayennes, all of the above, you know. This thing's going to stop somewhere, and it's not going to be pretty when it stops, because it seems that it's just not banks that are putting everything into the equation right now. Okay, so now let's get over to the market. We not only got an expansion since we've been on, meaning of price, the volume still isn't even close. Right now, you're at 581 million. That's a beautiful thing. You're at 1533. That's saying 700 million is going to be it in the NYSE. If we take a look at the NASDAQ, we're dealing with 1.5. The NASDAQ might come in with something. The NASDAQ might come in with about probably 1.9. If we go to the IWM, one of the targets is saying the IWM is up 2%. So it's up $2.42. You're taking over the high swing from the 28th, which was 117.14. And the IWM is finally making it to its benchmark. That benchmark being the 17th of September. That's 118.89. The other indices had already got into that. If we go to the Dow Industrials, that took that over a long period of time ago. The Dow took it over on the 8th of October. The Dow is crawling up to its highs right now. So the Dow's at 17,800. That's where it was trading. Oh, this is pretty cool. So that's where it's been trading. That's where it was trading a year ago. Same price. You have, with the Dow is going to be, we have 4 separate highs on the Dow, and it hasn't been able to, basically stay up at the 18,200 for any period of time. If we go to the cash S&P, this one here is really wild because when you take a look at this here, we're 2103, and the first time that we hit the 2103 was back in February of this year. That being said, you're still at 20, let's see, a year ago, yeah, 2071. So we're up 24 points today. So we're kind of where we were last November. The real key is going to be, of course, can this market get up over and blow away these highs that have been generated out there? We take a look at the NDX 100. Looks like the NDX is going to take it over right now, meaning this week. So we're going to close over it today. So 114.39. The last time that we were up here, that's a weekly. We can't do a weekly. Okay, we did 154 million. Today you've done 18. So the week's just starting, though. There's plenty of time to get up and over that whole level. And if we put this on a daily for a second, let's just see how this is laying out. So if you get it on a daily, the last high up there, we did 26 million. Right now you're at 18. And 26 million, by the way, at that high that was generated on the 20th of July, that wasn't even close to being enough. But, you know, we'll see what kind of force it can get going. This is, no doubt, window dressing in full force. That's how this is coming in. What you do have, though, when you go to highs like this and the volume is dramatically this light, it's, you know, you got to fail on price, but the bottom line is that that's when you're getting not only to distribution, but that's when you're getting that everything and anything is in the market, and they're just pushing, and then you just see this thing fall apart. We go over, we take a look at after the close out here. What you're going to see is this. Let's see. After the close, we're going to have a slew of earnings, no doubt, once again. After the close, we got, is that Fitbit? Let's see. Yeah, this will be interesting. Fitbit is coming out after the close. Now, this is, of course, the wearable fitness device. And we'll see where these guys are shaking out. That's trading at 41.34. You know, and what you do have here, they got a monster order. I was looking at this order last week. Someone had one large company, man. I don't know if they made a deal with them or not, but they ordered for their, I'll get that when we're coming back. They ordered for their whole company. It was like thousands and thousands of Fitbits. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials up 167. Nasdaq's up 72. S&Ps are up 24. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per a $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have ExxonMobil up $3. You get Caterpillar up $1.58. Oxy's up $1.30. Honeywell's up a buck. Big Blue's up 22 cents. JP Morgan's up $1.32. 3M up $2.78. You get buying out here. Let's go to JP Morgan first. JP Morgan. So JP Morgan right now, still in the same range. Interesting. So when JP Morgan broke down, the highs of the year, folks, is 70.61. They're at 65. It tried to make it last week up to this level, and he did 17 million last week. We're doing 12 right now. It's trying to get into this downdraft. Hasn't been able to do it yet, and it's pretty extensive. It's 17 million, 12 million against 28 million. Let's take a look at Bank of America, BAC. Bank of America, same setup. You know, you get the oils that are running this market out here today, Exxon and Chevron. Bank of America can't handle it also. If we go to Exxon Mobil first, you take a look at Exxon, that's up 296. This is driving with power, there's no doubt. This has the wide price spread, taking out a B point, taking it out with volume, all of the above. That's a 90 price target, and you're at 85.67 right now. Chevron, CVX, same type of setup. What's intriguing here, of course, is that the oil market is not up today. Chevron up 435. That is taking out the 91.66. After the close, what you are going to have is that Valero. VNO. Okay, this is I thought, yeah, VNO. No, not Valero. Vornado Realty Trust is going to be coming out with numbers. Now this is a big realty trust. This here, look at that thing. Oh man, this is taking off too. Maybe they already come out. Let me just see. No, they didn't come out yet. So whatever is happening here, it looks like this is also. Well, it's not an ABC up, but they got price going with them, man. This went from $98 to $103. We bring this back. Looks like it's going to go for after its highs. It's going to go after its highs of 115. And of course, we'll get intriguing there is that let's go take a look at the SPG inside that commercial real estate. That's also moving with so Simon Property's also moving with some juice. Yeah, that's at highs too. Okay, so when you look at VNO, SPG, they're at highs, and SPG was pushing last week into its high with volume. So when you look at those, that is saying your probability goes higher that rates are not going to go up. Because I suspect these would be two of the largest borrowers of money. And the way that is straightened out right now, it says, hey, rates just wouldn't go up. Well, that's the first part. The second part could get more intriguing. It would be saying that, yes, rates can go up, but in that context of rates going up, that the rate of inflation is going up higher than the rates. And so, of course, what ends up happening there is that a hard asset is where it's at. And, of course, what ends up happening, folks, if, in fact, we get into inflation, a hard asset being real estate ends up bringing more cash to the bottom line. The reason being is because it's leveraged. You know, because what ends up happening is if let's say inflation is running 3 or 4%, whatever that is, let's say 3 or 4%, and that the normal growth is like 2 or 3%. So now you're running 7 or 8%. You start running 7 or 8%. On a leverage basis, what ends up happening is that money piles up very, very quickly. Because let's say if you're just buying something for $1,000, you're putting $200 down. Guess what? On that 7 or 8%, on the 800 that is not down, all you're doing is saying, okay, the cost of money is costing you 5%. It's running at 9%. You're making 4%. Guess what? You're making 4% on an investment that's pure, meaning you've already paid all the bills. That gets pretty heavy pretty quickly. And those larger companies, that's how they are leveraged in this market. That's the bottom line. You can get this on Bloomberg, but there's a newsletter that securitized debt, large real estate securitized debt. I get a newsletter that has all these different deals on it. I just got it today. And it's amazing the amount of paper that's pushed out with the amount of capital that these large companies have to come up with it's a lot, but it's still very minimal as to how much the deal's getting done. Let's say if you're doing a $100 million deal, you got to come up with about $15 million. That's kind of it. 12 to 15 million, that's where this is shaking out right now. And then what they do is that they sell all different tranches inside that securitized paper. You know, the most secure, of course, is a very small amount over the LIBOR rate. Well, it wouldn't be LIBOR rate now, it'd be Treasury rate. And then it goes up from there. But they're still you can push a huge amount of paper out for a very small expense still right now. Let's go and we take a look at the Anico Eagle. We'll pull up Anico Eagle. It looks to me that these golds and these silvers are actually going to do ABC structures on the way up. They're really acting good out here. And it's like, okay, if they're acting good, you know, is this just buying and window dressing also? You can make that argument. That's one argument you can make. The other argument is like, hey, guess what? Something's going on underneath these gold equities, these silver equities, that you do have buy-in even with the metal down. If we go to Rangel Resources, you know, Rangel hit 65 today, was going against 1 million. We've done 700,000. You know, the XAU, the HUI look pretty good, real good, actually. We go take a look at the heaviest, the biggest mover inside the Index 100 today is Biogen. But Biogen, folks, this is still a dead cat bounce. Biogen is up $11. You get 2.3 million. You're going against 4.1. The way that baby is out here, it's like, you know what? That's a dead cat bounce, getting up to a higher level. We go to VRX, Valiant Pharmaceutical. They were out there pushing this all day long. You know what's the amazing part? When I was listening to the financial press, it says, well, Valiant's bouncing back. It's like, bouncing back? Valiant is up $6. Well, I guess for a $100 stock, that's up 5%, right? But Valiant has just gone from a price point of 263 down to 94. Don't even think about touching the stock, folks. And it still has a high volume, low, at $88.50. That says, number one, it's going to go after that low. Number two, we'll find out whether it's break that low apart. If you had a chance, in the New York Times Sunday, there was a great article in the business section explaining Valiant, more so, though, explaining GAAP earnings versus non-GAAP earnings and what it means if you are a fundamentalist. Now, if you are a fundamentalist, folks, please go read that article. It was by Gretchen Morgan, I think. Gretchen, you want to read this article because what's so cool about it, it explains very simply what GAAP and non-GAAP means, and then it shows how many S&P companies used to use full GAAP, and GAAP is better, cleaner, 5 years ago versus how many use it right now. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow up 159, Nasdaq up 70, S&P's up 23 rather. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is up 160, Nasdaq's up 70, S&Ps are up 23. Percentage-wise, this is where you stand right now. You get the Dow up 0.9%, S&Ps are up 1.2%, and the Nasdaq is up 1.4%. If we do take a look at Facebook, Facebook right now is trading at 103.20. And what that's done out here today, that's rejected the 101 price. And the reason that the Facebook deal is important is that this is coming out with numbers Wednesday after the close. The way that it's set up thus far is that it has, good juice going up to the 97 area. And we'll see how this sets up Wednesday after the close. But because we do have in the NDX 100, it's a modified weighting structure. Facebook has a decent weighting structure inside of that. We go over and we take a look at Google. What we have with Google out here today is going after the high volume swing from the day it came out with numbers, which is the 23rd. That's 7:30. Right now you're at 7:20.66. And we go back to Amazon. What you have with Amazon, Amazon is advertised. It's up 230, 2.5 million shares. And what Amazon did do out here today, they already set up, folks, their Black Friday website, the whole ball of wax. They're going to be, I believe they kicked it off this morning. One of the targets, we actually had pulled it up, and they're kicking it off with a huge amount of white lightning deals. So I suspect Amazon, we're going to be hearing a lot about Amazon as we come into this Christmas season, because there's no doubt, no matter where you go, it's not even Thanksgiving, and Santa Claus is already running around. There's no two ways about that. So it's going to be wild watching that whole thing shake out. It's going to be, it's going to be big. And if you do go over to Walmart just for a second, Walmart looks like bottom line. That's the loser out of this whole deal. Walmart is straight line down from $90 to $57. It's almost that's an amazing, and you have a high volume low at 57. So Walmart looks like it's going to keep going down to this 42 area, and because of the spreads, they're in. That retail business is a vicious business, meaning the spreads are so low, folks, that it doesn't take much in order to have a company go from positive to negative. We get a question about how long does window dressing last? Window dressing, folks, would be today, tomorrow, and you could say Wednesday too. So window dressing specifically goes like this. It's the last 2 days of the month, and that's where money managers are just shifting things around inside their portfolio. The first, second, at least the first and second, you can push into the third, realistically, is the amount of 401k money that has been taken out of paychecks on a continual basis. That's what it is. That money goes into funds. Funds do not get paid on cash. Financial advisors don't get paid on cash. So as cash comes in, they want to put the cash to work, or they don't get their 1.5%, 1%, 2%, whatever they're going to get. That's what window dressing is all about. And as that money goes in, you can see that the money's coming in here today, but yet about the only thing that's out there that looks like there's buying is 401k money. And if you actually, there's a great special on PBS about mutual funds, 401s in particular, how they were set up and how they basically are set up against the investor and for the broker-dealer community. Pretty wild. You stay right there, folks. We'll be coming right back. Dow up 162, Nasdaq up 71, S&P's up 23, gold down 760, silver up $15. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. The start to a better life or a better world or a better future is simply our belief that it is possible. You know, everything we want and need, folks, is right inside us. Grab it and go for it. Market-wise, let's take a look at it out here. Dow Industrial's up 165, NASDAQ up 73, S&P's up 21, gold contract down $7.90, trading at $1,133 an ounce. Silver down 15 cents at $15.41 an ounce. Platinum off $7 at $9.77 an ounce. Copper down a half a penny at $2.31 a pound. Light sweet crude off 46 cents, $46.13 a barrel. You might have had crude go down, but bottom line, folks, oil stocks top side. You had ExxonMobil and Chevron breaking a B point of an ABC structure on the way up. They got about another 5 points higher to go. Bonds, 10-year down 9 ticks, 127.12. 30 off 20 at 155.26. Now, the 10 and the 30, both of them contracted dramatically on volume. They haven't, however, rejected lower price. King dollar down 19.6 at 97. The euro up 6 at 110, and the yen trading at 120.75. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? SPY did 81 million shares today, up $2.40. You're at 210.33. Bottom line, yeah, anemic volume. We had extraordinarily anemic volume on the indices, too. We did 940 million on the NYSE, folks, versus 1.1. Bottom line, though, you got the higher price inside the SPY. Let's see, so we're at 210.33. You get 210.68. The reality at the high is 213.75. More than likely, we're going to see it go for it. The Qs, the NDX 100. What do you have with the NDX 100? NDX 100 closes out today at 114.61. I believe that's going to be over the high. Yeah, 114.39 was the high. We've done 21 million shares. Last time we were up here, you had 26 million. Bottom line, you were over that high. That means you can go higher. What we are going to have happen, we get some numbers after the close. The biggest number, I suspect, though, in the next couple of days that can move the NDX 100 is Facebook. Facebook is coming out with their numbers on Wednesday after the close. That's the one you're going to want to watch in spades. Gold contract. What do we have with gold? Gold contract trading at 1133.80. And what you've had happen since the Fed came out with their numbers is that gold has pulled back from the 1183 level. We were trading at 1183 on Wednesday. Pulls back. That being said, today you did 97,000 contracts. You're going into the October 2nd sign of strength, which had 190,000 contracts. And it looks like the gold, the silver equities, many of them, actually look like the ABC structures on the way up. Because what had happened, and pretty dramatically out here today, is that you got to lower price inside the equities. They rejected lower price. They had lighter volume, and then they actually start moving topside. So we're going to have some high volatility in these markets, as we have. But it looks to me like these metals want to move. Bond market. Now let's go over and take a look at bonds. So first we're going to just look at the TLT. So the TLT is the 20-plus bond fund ETF structure. We're trading right now at 121.95. Now, the last high out here was the Fed day also, the 27th. That was at 124. What you had, just as you had the 10-year and the 30-year today, they traded down, yet they didn't reject lower price. Well, the TLT traded to 121.68 and did reject lower price. We closed at 121.95, Anything inside 120, 170 is saying you're going back inside the larger range. So we'll see how this shakes out. But inside that, it looks like bonds also want to get into higher price. Let's go take a look at Fitbit. Fitbit just come out with numbers. Fitbit right now, it closed at 40.91. That right now is trading at 39.49. Let's see what they have to say. Now, Fitbit, folks, is the wearable fitness device. This baby had just gone public, I believe. Let me see when this went public. June 17th. So it went public June 17th at $20. They offered 42 million shares, running up to $40. Numbers go like this. Their revenue was $409 million. They are raising guidance on the revenue. The earnings per share was 19 cents. Non-GAAP earnings per share is 24 cents. You know, I had brought this up last hour, folks. Google, if you want to really get a clean understanding of GAAP numbers versus non-GAAP numbers and how these are released to all of us, Google New York Times Sunday Business Edition. It's a great article. It's an article that is very easy to understand, but when you read it, if you're a fundamentalist, it will absolutely blow your mind. It'll absolutely blow your mind. There's no doubt about it. Bottom line is that Fitbit, blew away its numbers. The estimate, by the way, folks, was 10 cents, and they made 24 cents. But guess what? That 24 cents is non-GAAP. Okay, so now let's take a look at Fitbit and see where we are in the context of, so $2 is not the end of the world. It's trading down $2. It was up 26 cents today. Yeah, this has been a consolidation. The high that it had hit, it come out at $20. The first day it traded up to 33. Second day you're at 40. Hit a high of 51. This is going to need a lot more juice in order to get up and over many of those price points out here. Some of the high volume stocks in this low volume market out here today. Let's go to Exxon and Chevron. ExxonMobil takes a beat, point out, just slices it and dices it. 24 million shares, 21 million shares, $2.50. That's an ABC structure, up $90 price target. It's at 85.28 right now. Chevron, Chevron's a 15-point ABC. That was up $4. That's at 94. I got a price target. It did 14 million. I got a price target of $100. So those oil stocks are going to continue to run that Dow Industrials and the S&P. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. We want to know what's going on in your world. Let's go to the world of the transports, folks. So the transportation index up 114 bucks today, 82.42. We take this and we pull it back. So the transports, the high that was generated, the first high out there was actually a year ago. That high was 93.10. Your first leg down, you come down. This was the first indice that actually came down, folks, okay? It stayed up at its highs until March. That's last November to March. Then comes down, and what's still laying out here is that you have that high volume low from August. And if you remember, when we were looking for a test of the October high volume swing low. That was 7,700, 130 million. Well, we came right back down there with 123 million. So what that is still saying is that, guess what? That's not done yet on the way down. That more than likely will get tested again. The reason being is that when you do a test at 123 million versus 130, that's still way too much volume as you're getting into lower price. That's the way that thing shakes out. We go take a look at, so that's your transports. And inside your transports, of course, it's all about the airline stocks. Now, the airline stocks have been at highs. If we go to American Airlines first, you're at 46.47. We bring this back, and what you're going to see, well, actually, this is pretty much off. No, it's off its highs pretty good, actually. So that came down from 56, it's at 46. Yeah, that came down pretty good. The rails have the ones that absolutely have killed the transportation. Union Pacific, that's trading at $89 right now. This has been off the highs pretty extensively. The highs in Union Pacific is out there at 124. And this still has a high volume swing low at the August 28th lows. Okay, so that's saying, hey, that also is going to go back, test that baby, and we'll see how that does shake out. That in itself, it looks like the rails have to do with the commodities coming out of the Midwest, oil coming out of the Midwest, fracking sand going into the Midwest. If we go take a look at a couple earnings right now, TXRH, this is Texas Roadhouse. This is a full-service restaurant chain. That closed at $35.01. This is trading right now at $36.50. And numbers go like this. Their revenue is $438 million. The estimate was 30 cents. They made 29. Their comps were up, same-store sales, 6.9 to 7.7. The bottom line is that the market in that particular case is basically pricing it up, and they didn't make their numbers. We take a look at UNXL. UNXL is Unipixel. They develop engineering films and lighting solutions. The company provides touchscreen, printed circuitry, hard coat resin. This is, hold on, is that right? The stock only trades at $1.19. Let me see. Yeah, I guess it does. So this is trading down. This is down at $1.06. Let me just see how much money this company takes in. This is Display Crystals. Wow, this always blows my mind when something like this happens. So picture this. This company is public, yet only takes in $1.5 million a quarter. That doesn't even make any sense. So check this out. This is a market cap of $17 million. It has a short float of 1 of 5, 19% short position. Anyway, let me see how long this has been public. This is always crazy when this happens. So it's hard to tell. My God, it looks like they went public at $32. Wow, that was a can of goods. That is extraordinary. $32, and the company, that's amazing. The silver, let's go over and take a look at silver. What we have with silver out here is this. Silver has gone from a price point of Wednesday. It's trading at $16.37. This is a rejection. This is awesome what silver did out here today. So check this out. Silver rejected lower price, $15.25. Had lighter volume as it come into where its sign of strength was. We did 39,000 contracts, and you're going into 61,000. Silver wants higher price. Gold does too. It's going to be pretty amazing. AIG just come out with numbers. AIG closed at $63.74. This is trading at $62.54. And, you know, depending on how long you've been following AIG, one of the best deals out here, and I owned this for quite a while. I don't own it anymore, but this was one of the best deals, and I remember this well. And if you did get my daily newsletter, you know that we had this, and this was a trip. So there was a warrant at the debacle when AIG got taken over by the government. They issued a warrant, folks, and what the warrant was this. The warrant had a strike price of $45, and the warrant was good for 10 years at that point. The expiration date on the warrant is January 19th of 21. And what had happened there is that this warrant, I believe when we got it, was $4.45. And it got as low as, well, this got as low as $4.66. It was $5 we got it at. Bottom line is that there's been a lot of money made in the stock, and that was one of the better deals out here that the public could actually get. You know, Warren Buffett got plenty of those deals, but when AIG actually come out with that warrant deal was a sweet little deal, because what was happening is that you had a deal for 10 years. The warrant itself was $5. The warrant itself traded. And the last time I saw something like that actually traded like that, and this is wild, because Intel, folks, in the early 90s, Intel warrants, I'm sure some of you folks were around, they were a great deal. What happened is that, and it's so funny when you think about a company like Intel, they had issued stock, but then what Intel had done is that they issued warrants also. And of course, what ends up happening is that the warrant was so much less expensive than the stock, and what ended up happening, once it gets near the strike price, it trades just like the stock. We go take a look at Avis. Avis, let's see, what's Avis? I'm not sure. What is Avis's car? Thank you. So let's take a look at. So Avis closed at $52.30. That was up $2.36. That is trading at $47. This thing's getting so it's down $5. It was up $2.30 today. Their revenue is $2.58 billion. Their earnings per share $1.77. Now they didn't miss that much. This is pretty wild. Their estimate was $2.02. and they made 198, but the market's taking them apart for some reason right now. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 165, Nasdaq up 73, S&P's up 21, gold down 850, silver off 16 cents, platinum off 8. We're going to be right back, folks.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 165, Nasdaq up 73, S&P's up 21. And as we do each and every Monday at 20 past the second hour, we have our man, Mr. Kevin Hinks from TD Ameritrade, Think or Swim. Now, Kevin, folks, has the best options show on the planet. Happens to be right here every Tuesday, 12 to 1 Eastern Standard Time. You can get that right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, folks, just go to TFNN.com. You'll see on the right-hand side, it says Watch Tiger TV. And, of course, don't forget, we start live programming every trading day, 8 o'clock in the morning to 6 in the evening. Now, if you haven't test drove the Thinkorswim platform by TD Ameritrade, Thinkorswim, great time to do it. Come over to our website at TFNN. You can see the banner on the top, on the side. Hit that banner. You can bring up the platform. They will allow you to trade with paper money so you can follow Kevin each and every Tuesday. Once you get on there, you can be in the swim lessons, which are each and every day at TD Ameritrade. They teach you strategies. You can decide what strategy is great for you. Kevin Hinks, what's going on?
Happy Monday, Tom O'Brien. How's everything?
Happy Monday, brother. And, you know, when we're talking about the markets, okay, the NDX 100 is at 15-year highs. We haven't taken it out yet. But bottom line is that it's pretty amazing 15 years later, and it's up at these levels. And we have Facebook coming out with numbers after the close on Wednesday, right?
Right. A lot of stuff going on today. Looks like Fitbit, we talk about it on swim lessons all the time, Tom.
Yeah.
There's the three-headed monster of earnings, right? There's the number.
Yeah.
There's the expectations, and then there's their guidance going forward.
Okay.
And it looks like Fitbit beat their numbers, beat their revenues, but it looks like they're giving some cautious commentary going forward.
And I was wondering why that's down, because they definitely did, man. Yeah, and it's down $3 right now. Yeah.
Yeah.
It closed at closed at 40.80. It's trading out at 37.90. Right.
Right. The expected move on Thinkorswim was about $4.67.
That is so crazy how that works, man.
Based on the option volatility, yeah.
That volatility, and what happens, folks, when we say expected move, it doesn't mean that we know which way it's going to move. We're saying it moves either up or down. But
Either direction, right.
You're right, and it's amazing how the option market can price that in.
Right.
Let's talk about that a little, right? So is the theory, Kevin, that as all of us as a collective are buying and selling something, and as a collective, it comes to that point. What is the exact theory?
Absolutely. It is volatility rises and lowers based on supply and demand and option order flow.
Okay.
And it's all it is. Everyone thinks, volatility is up for one reason. I'm like, stop. The only reason volatility is rising is because someone's paying the offer of the market maker on the other side, and he said, okay, that's enough at that level. I'm raising my offer.
Right, because the risk profile is too much. Exactly.
Right,
okay.
And he doesn't have any more supply at that price, so he raises his price, and then if it trades again, that's how volatility increases.
Yeah, that's so cool. Right.
And it's just simply supply and demand, and don't overthink it. Because that's what, believe me, I've moved enough markets in my life to understand that, if people are net sellers, we're lowering volatility. If people are net buyers, we're raising it.
Right. And you know what's so cool, what we're hearing, and folks, this is, let me tell you, I love Kevin and Thinkorswim, but bottom line, you want to listen to the program so check this out. No matter how long you've been in the marketplace, do you see how simple he just made that? And that's, Kevin, that's what's so cool about your program too. But because it is that simple, but people can tend to complicate a lot of things. You know what I'm saying?
Sure, they overthink it, or they're trying to read too much into it. I tell people that every day when we're chatting with them and talking with them through the show. Don't overthink some of these things. Sometimes things are exactly what they appear.
Well, what people are getting also, and this is different, because something you really should understand, folks, in the context of the world of trading, there's plenty of people that are out there and teaching something. There's very few people that have been in the aspect of where Kevin has been, being the major market maker inside GE, and then the folks that are over at Thinkorswim, they've always been in the market. Because there's no doubt when you are in the market, the correlation is actually easier, isn't it? To realize that just what you said. Okay, there's the supply, there's the demand. Hey, I'm not going to sell any more at this place because I know I can sell more at the next one. And then, of course, your inverted U is going to get out of whack. So it's really intriguing how that works in the real world, right?
And remember, and our goal always is, when I was setting the volatility levels in GE,
yes,
all I wanted was to find a level where there's two-way paper.
Right.
Trading on both sides. If it's coming in one side, guess what? You're too high.
Yes, exactly.
And if it's coming in only on bids, guess what? You're too low.
Yeah.
So my job was always to get it where there was two-way paper going in and out, and I knew I had reached the right level of volatility.
That's so wild. Now, when you reach a level like that, right? Let's just talk about just the individual equity. Does that level stay like that for hours, for days? How does that normally work?
No, it can rest there for a while, as you can see on like a volatility chart, or it can touch there and jump back up, and it has a lot to do with the order flow.
Sure, I got it right. Because if people want protection, folks, they're willing to pay up for it. And
that's right.
Yeah, and if they just saying, hey, if they think everyone's fat and happy, they're saying, hey, here, how many do you want, right?
And think about this, Tom. If it's a retail customer wanting to buy 1 or 2 or 5,
sure,
that's one thing. But if Goldman Sachs wants to buy 2,500, that's a little different animal you got going on there. They're going to get a little different price.
No doubt. And then, of course,
teardrops and tidal waves.
Yeah, and you got to be protected on the other side. You don't.
I have to hedge that if I sell them that.
Oh, you don't want to go home, not delta neutral. No doubt, man.
That's right.
So, this week, I mean, I guess, like right now I'm looking at the NDX 100 and I'm saying, man, okay, so I know that, Facebook can move this thing like off the needle, so it's going to be like really wild watching this thing shake out Wednesday night because, the way
it'll be a big one, that's for sure.
It is, I mean, of course, we know it can go both ways, and the way Amazon traded and Google traded, I'm saying to myself, oh man, I think we'll find out what happens, I guess.
That's all you can do, right? Get in there.
That's all you can do. I'm in there, man. I'm just trying to figure out. Well, I'm going to listen to that program tomorrow, and we'll figure out a couple of good strategies, man. Because
I'll look at all the new earnings coming out, and then we're going to do some blocking and tackling drills. We're going to work on the Greeks tomorrow.
Nice. Well,
every now and then you got to get back to the basics and make sure you got the fundamentals right.
No, listen, man. I've learned so much, man. It's just I really appreciate it, man.
I really have fun with it.
And you've made it so easy, man. I mean, that's the reality. And folks, 12 o'clock right here at TFNN, and you'll see. I mean, if you're into the markets, if you want to be into options, don't go trade options without listening to the program and going over to TD Ameritrade. Because I can tell you, folks, this is not putting it on red and green. Okay, the bottom line is that you want to do some work with it. Really have a strategies laid out. Guess what? Your probability of being successful goes up. What absolutely happens, which is so cool, though, you won't get slapped in the back of the head. And what I mean by that, and this was really cool, Kevin, what you do, too. I've lost plenty of money that I know what my risk was, right?
Sure.
What I don't like when I lose money and I get slapped in the back of the head, meaning that you made a mistake and I should have known that. That's a different ball game. Do you know what I mean?
Absolutely right.
Yeah.
Money that you lose like that, if you put on a bet, if you make a bet and it goes against you, that's fine. You can handle that.
Right.
If you put on a bet and you lose money because you don't know, that hurts your soul, not only your pocketbook.
That's right. Totally, man. Cooking, brother.
Can't wait to talk, Tom.
Absolutely. I look forward to the show tomorrow. Have a great one. Have a safe one, Kevin.
You too, buddy.
Okay. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had the Dow finish up $165. So let's go over to the Dow Industrials first. Inside the Dow, what you have, you're up a percent. You closed over the highs of the last week. We're at 17,828 and 820. Yeah, this is going to be pretty intense to watch how this shakes out, because what you have is this. The next swing point inside the Dow Industrials is 18,121. You know, and so that's what? That's 121. 221, that's 200, and that's 300 points higher. And, you know, when you take a swing point out, guess what? It wants to go to the next swing point. So we'll see how it shakes out, trying to make that run for that 18,152, 122. We take a look at the NASDAQ composite. The composite closed up $73, 5127, and 5175 is your next swing on the composite. Now, the composite, what the composite did out here today is this. It took out the swing of the 28th. So if we go take a look at the correlation between the 28th of October and today, what you have, the 28th of October was 2.1 billion. Today was 1.8. So inside that context of the taking out a swing point, bottom line, you took it out with lighter volume. Now, let's take a look at the correlation of how and what you're coming into. Where we came into and we're coming into two different areas. Now, this is where this gets pretty cool. The first area is July 24th. The second area, in July 24th, folks, we went from 5167 to 5,084. Then we bounced again. We got back up to the 5175, and then we came down again from 5149 to 5,035, and that was on the 8th. So the 6th of August, rather. So what we're going to do is this. When you do that, folks, okay, so those are the two areas that we're going into. So when we talk about price and volume, it got going with price, didn't get going with volume. When you look for correlation, what I do is this. I just say, okay, now you go back and say, okay, talk to me, and how did we come down, first off, on the 24th of July? Because that was the first leg down. So the 24th of July, we came down on 2.006 billion. That was the 24th of July. On the 8th of August, on the 6th of August, rather, we came down with 2.291 billion. And then, of course, what happens is this. This is where the correlation goes. We went up today with 1.8. The 1.8 is going against the 2.2 and the 2. And so what does that set up? That sets up that you are at highs, no doubt. You have lighter volume. Distribution is happening up here once again. So I suspect, number one, you're at the 5127. This thing's going to go for at least a 7.5. We'll see whether it goes after the, when I say 7.5, that's 5175. That was the high that was generated on the 5th of August. And we'll see whether it can make it to the 5231. You know, as a couple of the tigers are talking in the den, you know, Facebook, bottom line, when you talk about just fundamental numbers, it's pretty intense how they are growing. So here's the fundamental numbers on Facebook. In 2011, Facebook took in $3.7 billion. In 2015, they're taking in so check this out. This gets sicker. So in all of 2011, they took in $3.7 billion. Last quarter, they took in $4 billion in one quarter. They're expecting to take in this quarter $4.4 billion. Next quarter, 5.2. Okay, so in the aspect of how they're growing, that's a big number. The geographic area goes like this. 45% of their business is in the U.S. and Canada. 43% of their business, is in Europe. Big numbers. Now, technically, let's take a look at it. So when we take a look at it technically, we set this up, we pull this back, and if I put this on a monthly basis, what you do have is that you can make the argument that at $99 you still have volume. That's where that's set up right now. And there's no doubt, as one of the Tigers are saying in the den, will expectations, tank Facebook? Well, we'll see. My problem right now, the reason I'm so concerned about Facebook, folks, is that bottom line is that my take is that the NDX still wants to go down, when I know full well, depending on how we come into Wednesday afternoon, I'm going to have to figure out how to trade this NDX 100. The reason being is that when we're at highs like this, the Facebook alone could take the NDX and put it up another $100. There's no doubt about that. And if we take a look, if I bring this back, if you bring the 3Qs back for a second, and we bring this back, when we were talking with Kevin Hinks, we were talking about the NDX 100 being at 15-year highs. So the high that it had taken out, the last high in the NDX 100 was July of this year. That's when the Qs got to 114.39. Right now we're 114.61. Now the highs in the Qs are 120. 120 flat out was the high that was generated in March. Now that being said, it made it to 120 and then closed at 100. It gave up 20%. If you remember, if you were around in the year 2000, the bottom line is that you talk about volatility. We were at that level for a split second and then gave up 20%. The following month, we gave up an additional 25%. And in 6 weeks, the NASDAQ went down almost 45% from its highs. Well, it did go down 45%. The Qs went from $120 down to $77. And then the following month, it went to 71. It ended up doing a counter trend bounce up to 103, and then that was just the beginning of the real downdraft. It started at 103 and then didn't open its eyes again until $20. We'll see how this double top comes in, because what did happen last week on a weekly basis was this, is that it looked that the NDX double top. Now we know it didn't double top. The SPY, however, did fail on price and volume on the weekly. Now that very well could happen again. The SPY today went up 246. You've done 84 million shares. Last week, we did 504 million shares going against 865 million. So what the SPY has done today, it's missed the top of its downdraft by 6 pennies. I expect it will get it tomorrow. The benchmark there is 210.68. We hit 210.62 today. So the SPY very well could fail again on price and volume. Volatility, we got it in spades. This is Tom O'Brien. This is TFNN. You stay right there, folks, and we come right back. If you would like to test drive my daily newsletter, you can do that by coming over to our website at TFNN, going to newsletters, daily newsletters, trading newsletters, right? Market Insights, you can test drive that 2 weeks absolutely free. If you want to test drive the gold report, hit investment newsletters, test drive it for a month. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go take a look at just coming across the tape. It looks like this is going to be pretty wild. I wonder what Google is. They just come across the tape and they're saying that they are going to have drone delivery service. Let's see how this works. This is going to be wild. Even as companies like Walmart and Amazon move ahead with drone delivery, Google has given a concrete date as to when it plans delivery packages by drone. At a Washington conference today for air traffic controllers, Google executive told audience members that it hopes to have field commercial service by 2017. Google has tested the Project Wing in Australia, sending local farmers everything from first aid kit to candy bars and dog treats. In the United States, the company has also pushed for clear new rules for commercial drones. It's going to be wild, man, if we actually are going to get things delivered by drones. I'm having a hard time trying to figure out how many little planes are going to be buzzing around the sky and how much noise they're going to make and what that's going to do inside, particularly inside cities. I get inside everywhere. I mean, it's going to be pretty wild, man. And I guess it really has to do with where you are and what type of the restrictions are going to be out there. We go over and we take a look at the, let's go, so inside the commodity market out here today, this is what you had. Natural gas continues to take it on the chin, so let's go look at natural gas. Natural gas right now trading at $2.25. This has been a one-way trade, and it hasn't tested the lows yet. You know, Last week, natural gas went from 245 down to 218. You have light volume today, but you know what it did? It did not test that 218 swing low. And if we take a look at this on a longer basis, this is pretty amazing. You know, what was also amazing is that the oil market didn't move out here today, yet the ExxonMobil and the Chevrons of the world are doing ABC structures on the way up. Okay, so if we take natural gas, we pull this back on a continuous contract. Last week we hit 194, and your swing lows from 2001 to 176. Well, actually 190 is the swing low from April of 2012. I think before you can get into that natural gas market, folks, what you have to do is wait for a sign of strength. You know, you'd wait for a sign of strength, then you could buy the pullback, because the natural gas market, even before I was in the markets, that's just one vicious market when it goes down. And you know, I know it makes 0 sense that that's what the wholesale price is. But the wholesale price is out of whack with actually people are paying also. That's what that also comes down to. In Boston, they're paying twice as much as the actual price of natural gas. You know, so, you know, many times you look at this and say, okay, what does it mean? Right now, it means 0 until you get a sign of strength. The last 6 months, it's gone from 331 down to this price point of 218. So. The winter has not gone away, folks, just like the summer has not gone away. You know, we have El Nino, that is coming in, but bottom line, you can expect cold weather is also going to come in. You had wheat today get hit 2.6%. Lean hogs are down 1.4%. Gold was only down 0.7. Sugar was up 4% today. $15.11. Man, this is a big move, too. Sugar's going higher. It's got volume behind the move. Pretty amazing. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need's right inside you. Grab it and have a blast with it, folks. Thanks for being here. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.